Gaffers, this is Rin, and I just wanted to wish you good luck. So, good luck. Bye.
Hi folks, Scott here, and this is the wrap for Thursday, August 29th. So, interesting day in some ways, in other ways not. But let's first talk about what tomorrow may bring us. Tomorrow's Friday, ahead of Labor Day weekend, and it's also the last, arguably more important, the last trading day of the month. So our daily worksheet, which will be posted here in about 30 minutes, around 5:30 Eastern Time, normally by 6 p.m. Eastern Time when I'm done in my office, will show the odds for fading gaps on the last trading day of the month when below the 10-day moving average and above the 200, which is the current market configuration. Right here's the daily chart. But tomorrow being Friday, I thought it'd be interesting to combine the two filters and show you the results of fading gaps on the last trading day of a month when it occurs on a Friday to see if that adds any other dynamic in play, right? Because you often get more movement on Mondays and there are less reliable gaps and so on. So let me show you those results. They're pretty interesting and a little bit surprising to me. Now, to keep sample sizes decent, I had to remove the 10-day moving average. I did run it though with the 10-day moving average and it was consistent, just a whole lot smaller. So I think this is still fairly reliable. And there you go. So it's happened about 34 times past 10 years using an end of day stop. 31 of them have filled by the end of the day, meaning retraced back to the prior day's close, and only 3 have not. So that's a very high win rate on a decent sample size, 31 of 34, and it's equally good in both directions historically. Nice profitability on both sides, nice profit factors, 90+% win rates. So doesn't tell us a whole lot. I will tell you, when I ran this for our members in the trading room with our MTG stops, one of them was much worse. Now, it wasn't bad, just wasn't good anymore. So my members occasionally complain that I share too much of my free videos with non-members. So I'll make them happy this time and tell you, members, watch your data in the morning in my morning comments. You'll see which one of these changes markedly, but one of them is good and one of them still okay, so I wouldn't worry too much about it. Just tells me we're probably consolidation in the morning, right? That's how I interpret this data. All right, show you the worksheet going into today, because I thought we were going to have a pretty good setup. And here's why. Most of the overnight it traded, and I'll get to the overnight in a second, it traded up and in the European session, and we were trading between yesterday's highs and yesterday's close. So it was a 74% average win rate and a 1.6 profit factor. That means it's generated 60% more in profits than losses. And this is averaging all 8 individual indices gap guides. So we're talking about a huge sample size here, right? Thousands of historical trades. And I thought we were definitely going to get a trade. There were no unique day factors to worry about, no unique patterns, at least not from my core database. And in my pre-market comments, I had everything geared up to talk about trading an up gap until, when was it? Between 9:15 and 9:20 Eastern, I think, is when the market started dumping. And I had to hustle and rerun some of these numbers because I hadn't kept the results. That's why I was a little bit later than normal. I posted this right at 9:24, almost 9:25 today. So try to get it close to 9:20 even most of the time. But you can see a down gap was a little bit problematic. We end up with these down gaps there, there, and there. And though the sample sizes weren't big, they were fairly different. So that was a concern. So I decided with the, oh, and I didn't show you this on the worksheet. This data is not nearly as good. That's sort of a neutral setup. Not bad, but not good either. I'm looking for 60 and 1.3 for my minimum criteria for these two things. So a little bit weak here. So it's disappointing to see the sell-off that occurred right into the open. Happens sometimes with the good setups. And I said I would only trade an up gap if we ES opened by at least a point above the 4 p.m. close. Now that's where the futures were trading, the ES, when the spider closed at 4 o'clock yesterday. So it had to be more than 1 point above that, which meant it had to be greater than 1634.50. And because we did have some risk factors for shorting up gaps, for stress to the downside, it was going to reduce my position size, and it was going to be a small gap. and likely be on the fringe with some of the indices gapping up, some gapping down. So, and I said I would not fade a gap down. Now, I will admit, let me see how I want to do this. So I didn't fade the open with my core account. I did do a discretionary trade to the long side, so let me back up. And that was not, I didn't moderate the trading room today. Let me take you through the whole thought process of how I traded the overnight action. I'm going to pull up first the Globex chart from the ES last night. Oh, and I didn't show this to you either. So let me back up. So that was my plan. That's normally what all I cover, and then I go into the day's action. But really, most of my action was happening last night in pre-market today, and here's why. The odds of opening up today were 55%. Versus only 45 for down. And that may not sound like much, but because we got a monster sample sizes, we got 3 systems and 8 indices, our testing and tracking has shown that if you're at least 55% here, then you can add 15 to 20% odds to it. It's the ensemble effect, if you will, ensemble modeling like weather forecasters do. Thank you to one of our members who educated me on the term, is looking at multiple models. You have multiple uncorrelated or lowly correlated models saying the same thing, then statistically the odds go way up that that's right, way more than what the average of those models would show. So 55% doesn't sound like much, but in my mind it was at least a 70-75% chance of gapping up today. So I think last night's worksheet, what I showed in the video, yeah, this favored gapping up a little bit too. So I didn't have any reason not to think we're going to gap up. So when I get that situation, I'll admit there's a fair amount of discretion. I don't know that I'll ever trade the overnight aggressively, but I'm having some success making a little bit of money with small position size. So if you're willing to trade a little discretion, let me show you what I'm doing, and maybe you'll get a nugget here. Okay, just 1 second. I'm going to pull over another desktop. So don't worry about the different color-coded charts here. Just experimenting here. This is the overnight action. So this was yesterday's price. We were trading below the blue line, so it was down a couple points as I put the kids down. And 10 or 11 o'clock, I was looking at it and realized that I could get long here with my stop just below the low and only be risking about 2 points. And if we happen to gap up, we could gap up as high, I thought, as yesterday's highs. Didn't think we'd gap above it, but you never know. So I could risk 2 points or make a bunch more. Now, a lot of people talk about, well, you need bigger stops overnight. I'm trying not to do that. I'm trying to use my discretionary experience and recognize that when you have a long consolidation period like this and it breaks out of this range, right, you can box this, it's likely going to have some momentum to the upside, and this will serve as resistance. So I really thought I could pick either direction and probably have the same historical profit expectancy, but the odds were pointing to the north. So I didn't need to risk more than 2. If we broke down, I thought we would test the open and maybe even yesterday's lows, and I didn't want to risk that much. So I thought the best chance of a nice gap up was going long. I just literally just went long instantly. Had a 2-point stop, was at 30. I'm forgetting the number. I want to say 30.75 maybe. Decided not to have a tighter target because I really thought we had a good chance of gapping up with a sizable gap up in the UHC zone, and as it turned out, I was right. Had not gotten my targets were at 39 and up higher at 44, so I had not hit 39 by the morning when I got up. Went ahead and took profits at +7, and then I tightened my stop, and when the market started selling off pre-open, it hit my trailing stop at +5. So I made an average of 6 points while only risking 2. Sweet, easy trade. All right. You'll see this move that happened here. And unfortunately, I thought I was going to have this gap that I was telling you about, but it just rolled over and filled this gap. And then I mean, this was a sizable move. It went from roughly 38 down to 28, a 10-point move in a matter of 30 minutes roughly, maybe more, 45 minutes. Really changed the character. I've seen this pattern happen many times in the past, and it's normally a fake out, or at least you can count on a reversion of the mean. So I thought about putting this in the trading comments, but I thought it'd be too confusing because the data wasn't there. It was a pure discretionary trade, smaller position size, not my core count. I went long, scaled out +3. I was long at 28.75, scaled out +3 right in front of gap fill at 31.75, and then I closed the second half at +7. I don't know that I had a predefined target even. I think it was after the 15-minute range guides came out and they weren't too strong in either direction. So sweet trade. At that point, their guides, there was nothing real exciting about the guide. There was some data, but none of it was that looked attractive depending upon the market for the high breakouts. So none of it was real consistent though. So after a good overnight discretionary trade, above average size win, and the same with my pre-market trade on the gap discretionary trade, I called it, and I had a ton to do. I just called it. Did no other trades, and anyhow, that was my day. And I hope I haven't upset anyone, but I do try to educate and share what I'm doing, and if I think there's something of value that may be of value for some of you, I'll share it. So that's what I did. That was my day, and we'll see you tomorrow. Have a good one.